Twitter. Hello, world. Welcome to Why Invest Wednesday. I hope you guys are all doing well. Let's always give me a like, comment, share, subscribe if you haven't. Check me out on different social media channels, YouTube, both Facebook pages, and now Twitter as well, at JKCO Realtor over there, as well as my business Facebook page. Hey, thanks so much for all your support. Love getting this information out there, so I hope you enjoy it. If you're watching on the replay, give me a hashtag replay, hashtag live if you're watching live. Come on in and let's engage, and let's keep making Why Invest Wednesday famous, right? All right. So today we're going to talk about the disappearance of the starter home. And the truth is, this was an article called The Death of the Starter Home. I don't think anything's died, so we're not going to say death of the starter home, but absolutely the starter homes are getting less and less a part of our first-time home buyer options. As you know, we talk a ton about, inventory shortage, low interest rates, appreciation's crazy. We're still, able to afford certain things and things of that nature. But the starter home is definitely going away, and it's becoming less available. And it's not like it's just disappearing. It's not like people are just knocking them down and they don't come back to the market again. The honest truth is there is 5 or 6 different phenomenons that are going on that are making the starter home not either affordable or not available. First, we'll talk about the baby boomers. Definitely those looking to downsize are definitely taking their equity and wanting the smaller home. So in this Realtor.com article, it was 1850 square feet or less they were calling the starter home. So we'll kind of stick with that and just talk about that. Obviously, if you're downsizing, you're definitely looking for a smaller home. You've put up with a 3,000, 4,000 square foot house for so long, and now you have the equity and you can get into a cash position, buy the home, and not have a house payment for your later years and help with some of your retirement funding for sure. So those baby boomers are definitely jumping into that market. And I mean, I guess that's always been there, but obviously the baby boomers are a huge portion of our population right now. And so it's happening more and more often that we're downsizing in that population into these starter homes. Okay, so if you're talking about baby boomers are coming in with lots of equity. They've, had a house payment, primary residence for a long time, and they're going into a lower price point. Therefore, they're in a better cash position than our first-time home buyers. Most first-time home buyers have minimal down payment, minimal cash on hand, because they haven't had the benefit of home equity adding up, or any other thing that, people that are older may have, sold a business, been great savers, stock portfolios, things like that. Just time is a huge thing for the first-time home buyers. Next, we'll talk about the investors. And, when you say the word investor, you immediately think, oh, it's, these big bad investors, REITs coming in and buying up all these properties and renting. Well, the number one investor right now out there right now is the mom and pop investor. I would consider myself one of those. I'm not buying hundreds of properties a month, but I am looking to increase my portfolio when the deals present themselves. So those mom and pop investors are jumping into the market. Obviously, those mom and pop investors do not have a ton of cash, where they can just throw, cash offer. They're still financing on a lot of occasions, but they do have a little more cash than the first-time home buyers. So, investor loans are 20 to 25%. Regardless of anything else, when you're looking at offers, people are always like, okay, they're in a better cash position. Maybe they're a little better qualified. Not always the case, but that's kind of the human nature of where we're at here. The next is the big industrial corporations. There's a lot of rent-to-own things out there, the Divvies, the Home Partners of America, those things. Those are really just investors buying homes, pretending like they're going to be rent to own, which they will tell you that only like 1 or 2% of the people that actually enter into the contract rent to own actually fulfill that and buy the home back from those big investors. So what they're doing is building up these huge portfolios of rental properties, not to mention the people that are just buying them, people from China, whatever, huge industrial buying entire blocks obviously cash, um, not obviously one-to-one investment, things like that. They'll have maybe a portfolio loan, but it looks like cash to the seller. That screams easier for some reason, which isn't always the case. And that's just you don't have as many moving parts. You don't have the risk. So those industrial corporations are absolutely buying up properties, and especially in these lower rates, because rental rates, okay, it's kind of a plateau, right? You have a, you know, 10,000 square foot house, you can't rent it for, $1 million a month. But you start off with, the smaller homes, you can start renting them 1,000, 1,500, 2,000 for whatever market you're in. But then it just kind of inches up, where my house may be 3 times the amount of, a starter home, but I'm not getting 3 times the rent. It's not a direct correlation. So we kind of, as investors, want to get the most bang for our buck. So we're going to go to the lower ones. We can rent them out for, a decent amount. The price is low, the rent is high, and that's where the profit comes in. And then we have the flippers that are coming in, buying these homes that are in disrepair, which is a huge opportunity for first-time home buyers. Usually, if you're handy and can do that. But these investors, again, have cash. They can close in 2 weeks. People are like, okay, let's unload it. They're not doing inspections. They're not, emotionally attached to it. Just give me that property. I'm going to make it what I want it, and I'm going to sell it for profit. And in turn, bumping that price up, which sometimes takes it out of the first-time home buyer category. If you're taking something at a good deal, adding capital to it, and making it top of the market, sometimes it's above the first-time home buyer qualification number, depending on your first-time home buyer. The next is the refinance boom. We've obviously had a great refinance market with the low interest rates. So people are refinancing their homes, and at some point with such low interest rates, either they're refinancing their homes, taking cash out and doing what they want and expanding their house and adding square footage, and turn making it not a starter home, or they are able to qualify for their new home without selling their old home. So they keep that as a rental income, as passive income. As we all know, the wealth quadrant, passive income is a huge thing. People don't know all four, but they always know that you need passive income to be up in that wealth quadrant. So they're refinancing their home, maybe taking some cash out. They're still able to qualify for their next home while keeping theirs, because the interest rates are so low. And so if you're in that position, you're like, okay, well, should I keep it and rent it? Sure. Someone else can pay that mortgage. I'll pay this mortgage, and you're simultaneously building wealth. So obviously, one of the reasons I talk about homeownership and why it's so important. The next would be builders are actually tearing down, smaller homes and building bigger homes. So, I purchase, a block of properties, or I purchase one property, I'm going to knock it down. Well, it's going to cost me a lot more money this day and age, with the supply chain issues, with the labor shortage, to build that house. So naturally, I want to build a bigger house so that I can make more money. It's all about an investment, return on investment. So they're building bigger homes, where those smaller homes were. And that is truly the death of a starter home, is it's gone. And now it's a, move up home, or more, dream home, maybe. So that's one thing. And to add to that, with builders, they're not building starter homes anymore. They started to kind of, when we had the big affordable housing push and all that stuff, they started to build those. But now, again, the supply shortage, the labor shortage, they need to build bigger homes. There's demand at all levels. So it's not like they build a little bit bigger home, they're not selling it. Those things are still moving, because of those move up buyers that maybe are holding on to their starter home. So that's a huge piece of the puzzle as well, is the builders aren't building starter homes, because it costs about the same to build, starter home, maybe a little bit more material to build a move up home. So we're going to build that move up home, because we have to pay so much more, so that your ratios you're going to build that bigger home that's going to get you more return, in turn, not helping out the starter home. And then affordability is honest reality. So you do have some people who have been lifelong renters. Maybe they've, saved some money. They have a little bit of money on hand. and they can't afford that move up home, which artificially they could probably afford. They don't need us. You don't have to start at the starter home. So if you've lived your life, you've been a renter for a long time, you found some way to save while doing that, hit the lottery. That's a joke, or save money, and now you're getting into the market. Well, before, maybe you could afford that step up home that maybe that first time home buyer couldn't afford. Well, now if that starter home in our market's 450,000, you got to have a pretty good chunk of change and background to go above that. So when you're first getting in the market, so you're taking that, and they're also into that market. So that's just how it is. And reality shows nationwide, real estate's hyper local, obviously, but nationwide in 2017, the average starter home was priced at 159,000 on average, where today it's 260,000 on average. So that's a very different number, and obviously pushing things out. And so it's just that's kind of what it is, and we're getting pushed and pushed and pushed. Now here comes all of a sudden that interest rate going up, which eventually it's going to go up, and it already has gone up a little bit. And the honest truth is that interest rate affects your payments so much. I have people that qualified for a $500,000 mortgage, literally 2 months ago, and now we're running numbers, and they're like, well, we can only go to 475 on purchase power. And that's just with the little jumps in interest rates. So people don't really understand that that's got a big to do. And so it's just going to only push the can down the road and affect affordability as we go, even a little bit at a time. It's affecting people that are shopping at their top dollar. So the honest truth is the starter home is disappearing. I think we're still finding that we're able to get some first-time home buyers into starter homes, especially in the off-time markets, not the spring buying season, or, not the hot times, but it may take a little bit, but we're still finding a little bit of success. But as that inches up, the interest rate inches up, now we have these homes that are extremely high priced. They're still getting eaten up because we still have an influx of buyers in the market, regardless of, who you are. If you're a millennial, you're in that home buying stage, which is the biggest population that we have currently. It's the biggest generation population there is. So they're still there, and they're still able to do that. And so people are, we're talking in this article, even it mentions like the people that have followed the American dream and, done it right, so to speak. I'm not saying this is the right way, but that's what the article quoted is, gone to college, got a good job, and here we are ready to enter the buyer's market, and there's no starter home for you to buy. So what do? We either rent and, fight that battle of trying to save while paying someone else's wealth off. We maybe can have a gift from a parent or something if we're very, positioned to do that. Or we just kind of wait and grind and hopefully get lucky and, maybe get, inheritance or something where we can go. And Eric, absolutely. I'll show your comment here. He would say he's asking if the starter home's the new townhome or condo. I would say it's always kind of been that. Starter homes have always been townhomes, condos, and then the little bungalows you may find locally in Englewood or Westminster, Arvada. But even those townhomes now, they're building, townhomes right up the road from me. They're starting at 500s. So people are kind of taking that. They found those features that people will pay more for: the rooftop decks, the garages. They're still pushing that, maintenance that the HOA does and making it a positive somehow, which I think is crazy. But absolutely, those newer ones are starting to creep up into that move up price point. So it's the old starter homes, or it's the old, the old ones, older projects, things like that. Absolutely. But if we're in a starter home and they may be priced at $300,000, but if you add a $300 HOA payment onto that, now your payment's in the move up bracket and not the starter home bracket. So first time home buyers are still having trouble with those, especially because, I'll tell you right now, the average HOA that I see is $300 a month. And that's for the good ones. I've seen, typically you see as the price gets lower, the HOA gets higher. I've seen, $200,000 condo with a $500 a month HOA. You walk around the grounds and you're like, it doesn't look like they've done one thing of updating since. And it's because, they struggle to collect or, whatever. It's just not that important. People are paying these dues. They're required to pay these dues. Why do we have to work? Which is unfortunately becoming more and more common, which drives me crazy. But absolutely. And my wife, hopefully to get in now, that's what I'm trying to preach here is as the interest rates go up, that the first time home buyer will be pushed out of the starter home. And so if you're unlucky to, not have that savings or whatever, you're going to be in trouble. So at the end of the day, the time's now to strike. I don't care if you're in a lease or anything like that. It's time to get into something because the starter home is definitely getting more and more unaffordable. And we may see some big problems with this down the road, not immediately, especially in our market because everyone's moving here. But there are some markets that, are a little bit used to be great spots to get in. There's Memphis and Cleveland, and there's a whole list in that article which I will post here, and they are absolutely getting priced out of even those markets. And so that's the bottom line. I'll post this here for everyone to see the article, but that's a great article by realtor.com. Take a look at it, kind of see what they're saying. They have a lot of national, so keep in mind national averages there, not local. But we just want to, my goal in being in this business is to make home ownership available to everyone. And I know that this starter home thing caught my eye, and I was like, okay, we're going to talk about it for 15 minutes on Why Invest Wednesday. So thanks so much for allowing me to talk about that. If you have any questions, let me know. If you have somebody in your family, send them my way. Let's talk about making a plan, because obviously I know that it's not the right time for everyone to buy right now, but the sooner we get them in, the sooner that they can gain equity, the sooner that they can hopefully find one of these starter homes and make it a starter home and not make it their final home or their toes up home, as some people like to call them. So yeah, other than that, outside of the real estate world, I just saw that the Nuggets and Avalanche are requiring vaccines. I'll leave that there. Seems a little crazy to me, but it is what it is. The Broncos are in a major struggle. Got beat by the Browns and their JV team last Thursday. The good news is Peyton Manning's going into the Ring of Fame this weekend. I will not be in attendance because I have to take my kids trick-or-treating. So I hope you guys all enjoy your Halloween. Be safe out there. Give those kiddos lots of candy. And yeah, enjoy yourself. Don't scare them too much. And if you try and steal my daughter's candy, it won't be pretty for you. So just understand that. Just kidding. All right. Have a good one. Happy Why Invest Wednesday. Thanks for the comments. That's awesome, Eric and Sarah. And if you're watching still, give me a comment, please. Just tell me something cool. If you're on Facebook, StreamYard, you have to let Facebook know who you are, StreamYard know who you are, so you can comment on Facebook so I can see it. Anyways, have a good one. Happy Halloween. Happy Wednesday. Later.